Hi, James here with Reliant Mortgage Solutions. Today I'm going to be going through a quick overview about how to read through our mortgage quotes. So this is the one document that every single person who does a loan with us is going to receive. And since it comes out to you before any formal disclosures, it's very likely that this is going to be the first time that you get to put all the numbers together and kind of see the entire scenario at once. So therefore, I think it's pretty important that we understand how to read through the document and find all the pertinent information that it contains. That being said, we're going to go through every single section in this video, and I'm going to walk you through all the different fees in each section so that you can understand where they come from, how they're determined, and ultimately how they flow into the final terms of your deal. That being said, we're going to start at the very top here with this sort of underlying information. It contains things like property value, loan purpose, product, down payment, loan amount, occupancy, and interest rate. So for the sake of this exercise, I put together just kind of a generic scenario. So you can see in this case, it'd be a $380,000 property value. It's a purchase as opposed to a refinance. It's a 30-year fixed loan with a conventional financing. It's a down payment of $11,400 and an interest rate of 6.5%. This is, to a lot of people, the most important number on the loan, and therefore also the most important number on our quote. So if you're having trouble finding it, there it is right in the top middle. That being said, that's kind of the most important stuff in this top section. You can also go through and look at the other stuff as closely as you want, but the most pertinent stuff is going to be, those 5 inputs that I just read off to you. So moving on down the list to section A, this is otherwise known as origination charges, and it'll include 3 main things. And like I said, since this is a generic quote, I only have 2 of the 3 listed, but I'll still talk about each one just in case your particular scenario ends up housing all 3. That being said, the first is the loan origination fee. So generally what we do on this is charge a % of the loan amount. So to make it really simple, I just threw it in there as if it was 1% of the loan amount. And do keep in mind that this may not be included in your quote. We can price loans 2 ways. One, where you see here, where it's outside of the interest rate in the origination charges box. And 2, where your loan origination fee is actually encompassed in your interest rate, resulting in this fee not being charged to you. And 9 out of 10 times, we will quote you both ways, and it'll be your prerogative as to which one you want to choose, so it can always be the best option for you. Secondarily, the next fee in this section is the underwriting fee. In this case, it's $1,195. Now, do keep in mind that this is based on the lender that we ultimately take your loan to, so this number will not always be exactly the same. It's usually pretty comparable in this range, but do keep in mind that it will change based on your loan type and the lender that we take you to. So the third important fee to keep in mind in the origination charges is your discount cost. Now, you may or may not be familiar already with what a discount is, but ultimately it's when you pay money on the front end to prepay your interest, resulting in a lower interest rate for the life of your loan. It's also called a buy down. And so you'll also see that listed in this top left section, origination charges, if you elect to pay a discount cost in order to reduce your interest rate. Moving on now, we're going to move into section B, otherwise known as services borrowers cannot shop for. So as the name indicates, these are basically things that we pick out for you as opposed to things that you pick out for yourself. And as you may or may not have already noticed, I switched this over from conventional to FHA for the sake of section B, because I want to make sure you know if you're getting an FHA loan, this is where you can find your MI upfront premium charge. This is that 1.75 factor that ultimately gets rolled back into your loan amount on top of your regular loan amount. And as you can see at the top of this quote, it's indicated here. Your regular loan amount is $236,425. Your total loan amount is $240,562. So that's basically this number plus this number. It's an important concept to keep in mind in section B that these are estimates, and what we'd like to do is show you worst case. The reason being is that in the mortgage disclosure process, if we ultimately show you numbers that are less than what you have to pay at the closing table, we have to cover the difference. That's called a tolerance. So what we do is we show you the worst case, highest fees, and then as we go through the process, numbers get pinned down and finalized, and we get closer and closer and closer to the exact actual value that you'll pay at closing. And you'll see this kind of change over time because the process is that you're going to get this initial quote, then you're going to get your initial loan estimate, then you're going to get a locked loan estimate, then you're going to get an initial closing disclosure, and then finally a final closing disclosure. And as you proceed through that process, you'll see 9 out of 10 times the numbers will reduce and will zero in on that final number that you're ultimately going to receive. And so specifically, some of the things that may change start with the appraisal fee. This $595 is kind of a generic price for an appraisal fee, but in many cases, you may get something known as an appraisal waiver that'll reduce this $595 all the way down to 0 because you won't actually be required to get an appraisal for your mortgage transaction. The next fee that may reduce in price is the credit report fee. You can see it's listed as $100 here, but it's not always $100. Sometimes it's a little bit less, sometimes it's a little bit more or less. So just depending on your loan scenario, this can and may actually be less than $100. The next fee that may reduce in size is the verification of employment fee. So this is primarily charged to people whenever you have an income that is variable, meaning you get paid commissions or bonuses or other things of that nature. If your income is very steady, say you have a set salary that's the same every paycheck and or maybe a set hourly rate that's the same every paycheck, then it's very likely that this fee will actually drop off and you won't be charged it at the closing table. The section that we're going to talk about is Section C, otherwise known as services borrowers can shop for. And kind of inversely from the previous section that you cannot shop for, these are things that you will be picking out for yourself. And that choice basically comes in the form of determining which closing attorney you want to use to close your transaction. So for the sake of these quotes, we use a generic closing attorney and that has slightly higher prices. And the reason we do that is for the exact same reason that I explained in Section B. We don't want to have any tolerances, so ultimately we want to show you the worst case numbers and then have them go down throughout the process. So as you can see, these numbers are going to be set in place. 825 will be the same on every purchase, as will 50, 159, 275, and 10. The only number on this list in Section C that will change based on your loan scenario is the title insurance premium. And so basically that will scale with the cost of your house and with the volume of your loan amount. So the more expensive house, the higher the loan, the more expensive this fee is. And then inversely, if you have a less expensive house with a lower amount for your loan, the cheaper that fee will be. But those are the main things to consider in Section B. It's ultimately up to you where you want to close. And then once we end up with that closing attorney's information, we'll reach out to them and we'll determine exactly what their fees will be. But for the sake of this initial quote, these are the numbers that you're more than likely going to see. The next section that we're going to cover is this taxes and other government fees section located here in the top right of your quote. All of these figures are basically determined by your loan scenario individually, so don't expect to see these exact numbers in here. But as it indicates in the name of this fee here, intangible tax is $3 per 1,000. Transfer tax is a similar type of equation to determine, although it's obviously not these exact numbers. The only fee that is pretty static in this section is a recording fee for a mortgage. This is very likely going to be between $60 and $80 in this section. But like I said, don't expect to see these exact numbers in your quote because these scale with the purchase price and or loan amount. Next, we'll be going over the following two sections simultaneously. That's both prepaids and initial escrow payment at closing. They do kind of work in tandem, so it's easiest to explain the two simultaneously versus going one by one. That being said, I'm going to go through each of the line items so you can understand how they work together. The first is this county property taxes. Now there's two assumptions that are being made in this line. The first of which is this, the amount of money taken per month for taxes. In this case, it's $316. And we basically estimate this by going to your county's tax website, seeing the most recent yearly bill, and then dividing that by 12 and using that figure. Now the following assumption that we make is how many months are going to be collected under this prepaid section at $316 or whatever your value would be per month. In this case, we've estimated that it's 3 months. Now the way that's determined is that there needs to be an entire full year of taxes paid between both you and the seller. So depending on when you buy this house in the year, and then also depending on when the tax bill is due, these numbers will change anywhere between 2 months, 3 months, 4 months, all the way up to 10 months, 11 months, 12 months. So do keep in mind that these are estimates, but we should be very close. The next line item under prepaids is this hazard insurance. During the mortgage process, you're going to be contacting an insurance provider and picking out your homeowner's insurance, and then attached in that will be your homeowner's insurance premium. You do have to pay for the entire year up front at your closing via a closing cost, so that's what this indicates. This is basically your entire yearly premium for your homeowner's insurance. Now, thirdly is this prepaid interest. When you do a mortgage, you have to pay for the whole month's interest, not just the portion of the month that you buy the house in. So that being said, this is basically the inverse of how many days are left in the month. So say you're buying a house in a month with 30 days. Well, therefore, if you buy it on the 15th day, you'll pay 15 days of prepaid interest. We always split the difference on an initial quote like this, and it'll always say 15 days. But based on your actual close date after you get a home under contract, then this will adjust to either be more or less than 15, again, based on when the closing date is. So these initial escrow payments are always going to say 2 months at your going rate for whatever your property taxes and your hazard insurance will be. And that's because your escrow account wants there to be both a running balance for the full year and then also 2 additional months as basically backup for them as they go to pay your bills at the end of each year. So that being said, this will always display 2 months, and then the county property taxes will display based on the time of year and when your bill is due. And this one will always display 12 months, and the prepaid interest will be based on what day you close in any given month. So the next section that we're going to be covering before we go over the total estimated monthly housing payment is this other section here. And this will basically encompass fees that are either optional or fees that only arise in certain specific situations. The one that you're going to most commonly see is this title owner's coverage premium. Now this does come in a bundle with the title owner's lender's coverage premium, but the difference is that this one is optional and you don't actually have to buy it. We always do advise that you do buy it because it covers you in the event that there's some kind of title dispute, but just it's in this section H, other, as opposed to being in section C, because it is technically optional. Other fees that you may commonly see in this section include an HOA transfer fee. Now, that's basically a one-time fee that you pay at closing to change the HOA out of the current homeowner's name and into your name. Other than those fees, it's just kind of one-off scenarios, and if you do see something in section H you don't understand, please reach out to us and we will explain that entire fee to you. Now, finally, the last thing that I want to cover in this video is this total estimated monthly housing payment section. This basically encompasses your principal and interest, which is represented by this first mortgage line item here, and then the rest of your full payment, which is your hazard insurance, aka homeowner's insurance, your property taxes, and your mortgage insurance. Now, I want to talk about this one in particular, mortgage insurance. Please keep in mind that it will not always be $95. It'll be based on a factor of your loan amount, and that factor will be determined by a lot of different inputs, things like loan type, credit score, first-time home buyer or not, things of that nature. So do keep in mind that this will always scale differently based on you as a borrower and then also based on your loan amount. Kind of furthermore, if we were to be looking at an FHA scenario, this would always be a 0.55 factor. Therefore, it would take that variable out of the equation, but it would still scale with your loan amount. So again, don't expect it to be a static number. Expect it to be a percentage of what you're borrowing. So I think this is a pretty thorough overview of how to read through our mortgage quotes. Please do keep in mind that both quotes that I displayed in this video are just generic scenarios, so don't expect to see any of the exact same numbers that you see on here. The important thing is that you understand where each of the line items come from, how they can change based on your loan scenario, and then use that to make the best decision for you throughout the loan process. But also, please keep in mind that you can reach out to us at any time to ask any more specific questions about the quotes, or if you want to change any quotes or anything like that, we're always available to help you. Thanks.